This week, US markets continue to march higher. Dow Jones, Nasdaq, Russell, and the S&P 500 all hold bullish structures, each with its own level of strength. The probability of a continued rally is high, and the charts are signaling more upside, though with nuances worth paying close attention to. Let's step into the weekly landscape and see what the indices are telling us. And today we start with Dow Jones. This is the candle map, the closure on Friday. So what we are seeing here is that a dark cloud cover on the daily frame and a little move below the 8 days EMA. So this could be bearish, especially if we consider if we see a confirmation on Monday. However, if we look at the bigger charts, like two-day frame, for example, we are seeing like a very strong consolidation here. Most likely it's a bullish flag that is being formed, and we would be looking for a continued move higher. The same can be said about the weekly frame. There was no confirmation of a potential bearish move here, and I think that this is a consolidating move at this moment. Well, we are looking for higher prices. If we look at the Elliott waves, this is the chart we've been tracking since June 15. So far, it plays magnificently here, and with the red path practically unchanged. We were looking. This was the June 15 when we draw this chart. Now we are looking for wave 5. Dow Jones potentially climbing higher, and the midpoint target for this the wave 5 would be around 48,000. Well, no changes here, and I'd like to have a look at the biggest contributors to the Dow Jones. At this point, this is the weekly closure. So Goldman Sachs, Sherwin-Williams, Caterpillar, United Health, McDonald's, and Home Depot, they all look bullish here. Microsoft, unfortunately, is bearish with a bearish candle, but we will discuss Microsoft later. And Visa is also bearish at the moment. Overall, I would like to say that the chances for a move higher for Dow Jones, from the perspective of the biggest contributors, are significant. Now let's talk about Nasdaq. The candles closure here. So the weekly candle closed with a strong bullish engulfing and very good chances to move higher. So at the beginning of the week, we could see a threat of confirming a reversal on the weekly frame. However, in the last 3 days, these bearish odds were greatly reduced. And this is the chart, practically the path that we discussed in the latest monthly report last week, saying that there will be weakness at the beginning of September, and after that we are looking for a bullish move. So far the candle looks like a neck candle, and it is holding above all major support lines. The 10-day frame, which is closing on Monday, unless index drops about 4% in one day, any other outcome would likely be bullish or neutral bullish. So the index is fairly strong on the upside. This is the chart that we've been tracking since April 22nd. So this was the column bottom with the initial target 20,000 to 21,400 right now, but this wave morphed into an impulse. This is something that we discussed later on in June, and so far we are tracking the impulsive structure here. Since the call on April 22nd, Nasdaq made almost 30%. Those who were with us at the time made some handsome money. Well, that's the chart. I think that there is a possibility that the latest pullback was either wave 4 in green or wave 4 in blue. Well, both counts have certain support. However, at this point, I think that the green is slightly higher from the perspective of probability. That's for Nasdaq. Now let's have a look at Russell. Russell is clearly bullish after the weekly closure. We have a very strong continuation candle on the weekly frame, on the 10-day frame, and the doji that Russell formed on Friday, most likely just opposing doji, a continuation one. So the rally is healthy. At this point, we are not seeing any concerns. And speaking about the Elliott waves, so this was the last update to our chart on June 9th, and June 9th was here, and since then Russell made 12.5%, and we are looking for higher prices at this moment. Now, after Russell, let's have a look at S&P 500. So S&P 500 closed the week with a bullish continuation candle, although it's not extremely strong, but still, nevertheless, it's bullish. Incomplete dark cloud cover on the daily has more chances to continue higher, and the 10-day frame, most likely it will close either with a bullish continuation candle, or at least a neutral one on Monday. So now let's have a look at the Elliott waves. Elliott waves, this is very similar to what we have for Nasdaq. The latest pullback was likely either end of wave 4 in green or wave 4 in purple. And I'd like to say that since April 22nd, that was my big call here. S&P 500 added almost 22%. And if we look at the shorter term frame, so there are still quite a few questions that I would like to be answered, but so far the green path looks more preferable here, potentially forming wave 3 of 3. And if this hypothesis confirms, then we would be looking for a very handsome rally before the end of September and probably beginning of October. At least this is what the channel tells us. The charts and targets remain unchanged. Now let's have a look at the large caps here, and I would like to say that Microsoft is looking bearish. However, there are some signals that I'd like you to be informed about, and also something I have to say about Google Alphabet. So these analysis are available on our website, and the subscription is required for those who are interested in what's going on with these two and what would be the next step. If you look at the other weekly closures, Amazon looks bullish, and Apple is also closed on Friday with a very healthy bullish continuation candle. At some point, it could even be considered as a rising three methods. Tesla is bullish at this moment, and I'd like to say that Meta hold the price here, hold the level, and Now it is about to reverse. I think that this pullback is over. Most likely we are looking for higher prices. Speaking about Berkshire, it formed on the weekly frame three white soldiers, and now the last week was just a healthy pullback or consolidation before moving higher. Unfortunately, Nvidia is looking bearish, and I think it has much better chance to continue lower next week. And if we look at the bigger frames, like 10-day frame, if it closes like this on Monday, it will be a confirmation of a top on this big frame. So be prepared for potential weakness for Nvidia for several weeks or even several months. Well, and now let's move on, and I'd like to also discuss some global indices here. So what I'm seeing here is the potential very strong setup for Shanghai Composite Index, and also a very strong setup for Nikkei. Well, I'm going to discuss them in the written report later today, time permits. And I'd like to say that I don't like how Germany, how German index is behaving. So lost uh, it lost a strong support at 8 weeks EMA, two closures below the line, and now it is holding at the 20 weeks support line. So another, technically it's a confirmation of a little top, and could be even a double top or possibly a head and shoulders. Well, if the next week closes with a red candle, significant red candle, I would like to say that the German index is up for a significant pullback. Well, that's a quick overview of the global. And now let's have a look at the United Health. That's something that I already posted on the website. And now let's have a look at it. So this was the call that we made on December 23rd, 2023, saying that United Health was rallying for 14 years, and it stretched technicals very well. And now it's time for a pullback. So, and at this time, I'll indicate that this 233 level as a potential support line. So going forward, moving forward 22 months. So at the end of 23, United Health completed an advanced block on the annual frame. Then in 2024, it formed a bearish engulfing, and we shouted out about this one in our annual update, and now we had a result. So it's a very strong pullback here, 234 and 60. So it's just 1.5 points above the level that I discussed way back in December 2023. And this was the chart that we shared with our subscribers on February 23rd, 2025 this year, saying that beware, there is a very strong move coming for United Health, and this is exactly how it ended. It found support at the 200 months moving average, something that we were projecting, and now it formed a monthly bullish harami. So now let's talk about this one. So this is the monthly chart. This is a very strong formation here, and there is a very good chance, if we see September in green and a significant move higher, this would be a bottom. And this bottom already recorded on the weekly frame. We have a tower bottom here and a continuation. The 10-day frame also has a very strong insight up, and the 15-day frame also has a very significant bullish signal. Now let's have a look at what are the perspectives. So first of all, I'd like to look at the short-term frame. There is a possibility that United Health either formed already in the first impulse up, which is 1, 2, 3, 4, 5 in blue, although we wouldn't know what happened here in this big gap. However, there is a chance of any wave here, corrective wave or impulsive. In case of the corrective wave, we might have a wave 1 here completed. In case of the impulsive, this is the chance for wave 3 here, wave 4 and wave 1. So we already have a higher high here, so that at the minimum level we can have an ending diagonal for wave 5. And minimally, this impulse, the first impulse, already completed. Now now we need to see what will happen next, whether it's going to be a green count or a blue count. It depends on the next. Probably by the end of September we would know what's going to happen. And now let's zoom out and see what's happening with United Health from the helicopter view. So this is the chart from the very beginning, from 1985, and I think that potentially United Health completed the cycle or super cycle wave 1 here. So it breaks nicely into 1, 2, 3, 4, 5, and the most important thing that this pullback is exactly 62% of the entire wave since 1985. So that's good enough for a very strong and sharp zigzag for wave 2. However, I would be a bit cautious about it. So if this wave, this could be also wave A of a bigger wave 2, A, B, C, like a flat, for example, or an even bigger zigzag. However, 62% is a very healthy pullback, the most typical one, and some other signals saying that there is a possibility that we are looking at the beginning of wave 3. And this little candle here is just the one that I discussed here. So this is just the first, potentially the very first wave of the bottom. And considering this, the next wave would be wave 3 with the most typical ratio. It's 1.618 of the length of wave 1, and in this case we are looking at the price of 1200, 1300, which means that the price can quadruple over the period of well, the period we don't know yet, even though that it shows like 10-12 years here. I think that the wave could be much stronger and much sharper, but we will know about it only after we see several other waves forming in that direction. So this is dotted or dashed blue line is one of the potential angles for the wave 3. So once we know it, we will definitely update the slope of this rally. Well, that's the perspective for the United Health, and perhaps we are just at the very beginning, and we are very lucky at the very beginning of a major move up. So if you're going long here, the invalidation level would be a new all-time low. Well, that's not all-time low, the new lower low, pardon. The invalidation would be a new lower low, which is below 234.6. Well, that's all for United Health, and let's wrap it up. The picture is clear. The major US indices remain bullish with varying degrees of momentum, and the path of least resistance is still upward. Beyond the indices, one of the most notable stories is United Health. After a super drop that we forecasted multiple times at Investing Angles, the medical giant now shows signs of forming a very significant bottom, a setup that could mark the beginning of a super rally. The full public study is posted on the website. Follow the link in the comments to explore. Meanwhile, Microsoft and Google are flashing signals of important moves. Both are covered in detail, short-term and long-term, in the written reports available to subscribers on the site. For a deeper understanding of a broader market backdrop, watch our weekly strategy and commodities digests, both released on September 6. Together, they frame the current shaping this rally across equities, sectors, and global trade. As always, engage with the charts, share your views in the comments, and spread this digest across your circles. Subscribe on YouTube and follow on Reddit, X, and Telegram for more updates. At Investing Angles, we chart the charts before the crowd even blinks. Thank you for watching.